Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Growth and income stocks now is what we're talking about with Todd Bunton, our growth and income stock strategist here at Zacks.com. A couple of recognizable names that you're going to talk about today. I will admit, GES Inc., GES, the ticker symbol.
Mm-hmm. That's right. Yeah, they're pretty popular, especially in the U.S. Everybody knows it for their apparel and their accessory products.
Right.
But they're actually growing internationally too, very strongly. And just to give you a perspective, 10 years ago, 94% of their sales came from North America, and in their most recent quarter, only about 50% did. And really that growth has come, of course, from Asia. Everybody wants to be in the Asia market, but also in Europe, so they're growing very strong there. The company recently reported their results for the third quarter of 2011. Earnings per share beat by 27%. It was up 9% year over year. And over the last 4 quarters, GES has beat by an average of 16%. So they've been seeing very strong growth there. And the revenue growth was up 17% year over year.
Okay.
It was pretty solid in North America. We saw about 6% growth domestically. Internationally, though, was the real story. Asia was up 35% in terms of revenue, and Europe was up 28%. So it's not typical that you see those types of growth rates in Europe, but GES has definitely been able to succeed there.
Okay.
Now, their gross margin did contract a little bit in the quarter, so this led to a slight decrease in operating income year over year. But in spite of this, management revised their guidance higher for 2011. Mm-hmm. This prompted analysts to increase their estimates. So you can see here in the chart, most analysts revised higher for 2011 and 2012. Analysts are expecting about 18% growth in 2011 based on the Zacks consensus, and 11% growth in 2012. So you're seeing good double-digit growth there. Let's look at the income picture. The company recently delivered a $2 per share special dividend. That's not something you see often, especially from a company that's growing like this, but they're very shareholder friendly.
Why was that a special dividend?
They just had a little excess cash, and they figured, the best way to add value, to return value to the shareholders is just give it back to them instead of plow it back into the business.
So it was a one-time event.
That's right, yeah. But they also increased their quarterly dividend too by 25%. And since 2007, they've raised their regular quarterly dividend at an average rate of 36%. So very shareholder friendly there on the income side.
All right.
They yield about 1.7%. And then in terms of valuation, their PEG ratio's at about 1.0. So there's a lot to like there.
All right. Then you've written about International Flavors and Fragrances recently, IFF, the ticker symbol. You must be in the holiday shopping.
That's right. Yeah. Yeah, they're obviously they make flavor and fragrance compounds, and they sell them to the food and beverage industry. They use them in their products. They also sell to the cosmetic and household product industries. So people might not be familiar with the name, but they've probably used their products somewhere along the way.
Right.
The company's seen strong demand both domestically and abroad. They recently delivered third quarter earnings per share that beat the Zacks consensus by 14%. And it was the company's 4th consecutive positive earnings surprise. So they're seeing strong momentum. Earnings per share were up 20% year over year. So they're getting good growth there. Revenue growth was strong across the board, both in the U.S. and domestic and abroad. Latin America was particularly strong for them. So they're in emerging markets, and they're growing strong there.
Okay.
Now their gross margin actually expanded in the quarter. They were able to control their input costs a little better. Operating income was up 37% year over year. So you're getting the strong growth. Analysts have been revising their estimates a lot higher. This is the price and consensus chart for 2010 and 2011. You can see over the last several months, really, analysts keep revising their estimates higher as business picks up for IFF. Based on the Zacks consensus, analysts are expecting 27% earnings per share growth this year and 10% next year. So you've got good double-digit growth there. And then on the income side, the company pays about a 2% dividend yield. And since 2002, they've raised their estimate at an average rate of 8%. And then when you look at the valuation picture, you can see on the chart shares have risen about 30% since early July. But because the earnings estimates have been revising higher too, valuation's still in check. They traded about 16 times forward estimates. That's in line with the peers.
All right. Do you own either of these two?
I do not.
Check out more Zacks Rank Buy stock pick ideas on our website, Zacks.com. The homepage, upper right-hand corner, that's where we put 4 new ideas for you daily, one in each of the investing categories that we write about on Zacks.com. Todd's included. With Todd Bunton, I'm Terry Ruffalo.